if we go back to where the inflation started with that policy, that home builder policy back in 2021, you can see there that house building costs over the past 4 years have actually increased 60%. 60%. Now that's 15% per year in a position where we've seen normally it's around 2 to 3%. So even though it's sort of like it's eased, hey, that's better. It hasn't gone backwards. You know what I mean? It's still 60% higher than where it was 4 years ago to build a house. So, and this is in an environment where we already had fewer homes than we need to satisfy demand. In migration returning, already under supply, and all the red tape and green tape that is a barrier to to new development.
Money isn't the root of all evil, the fucking lack of it is.
Not money, the lack of understanding money.
When I put that into emphasis, when I realised that psychological effect and how it hit our family, I FTB all the fucking way.
You are now watching the Money Mentor podcast
with Graham Home.
Graham Home.
Welcome to another episode of Wilson Weekly on the Money Mentor podcast, where spreadsheets meet SaaS and property trends are juicier than a clearance rate graph in spring. I'm Rachael Howlett, your finance strategist, here to keep you one step ahead of the data roller coaster. And as always, here is the man who can turn those land prices into light entertainment, Dr. Andrew Wilson. Very exciting today, Doc. We have a land price data.
Yes.
Not often we get this data, and our listeners are going to be the first to hear it. Always important to understand this, especially when we're talking about build prices. So let's dive in.
It all starts with the block of land, doesn't it, Rachael? And we've got a data set which we don't really show on the show too much, but we're going to start showing it because it does start at the block of land, the whole property, sort of environment. So if we understand what's happening with building blocks in terms of prices and sizes and the number of sales, we can get a feel of what's to come in the future. We do look a lot here at building activity, building approvals, but of course, all those building approvals have to be situated on a block of land. So very interesting today. It is very much a builder's show today in a way, because we're going to look at house building costs as well. We're not, we say it constantly and we all know it, that Australia is not building enough homes for its populace, enough new homes. Of course, you've got to build a new home. This is part of the reason why we have constant upward pressure on prices and rents, and for various reasons. And we're not alone here. A number of other similar advanced economies have the same problem, whereas they can't build enough homes to satisfy demand. In fact, it's interesting, Rachael, just as a bit of a segue, California has just announced some new proposals to improve the supply of homes, of new homes. They've now created an as of right process whereby if you live near a railway station, then developers can actually, if they can secure land near a railway station, can build up to 7 stories now. So they're becoming very proactive in terms of providing higher density development in established areas. And we're seeing similar activities here in Australia, particularly the Victorian government and the New South Wales government are initiating similar types of policies designed to increase higher density living. And despite, all the barriers that there are at the local level, not in my backyard sort of thing, but the need is getting greater in terms of we need more houses. And, we're not building enough houses. We're not building currently enough units. And as we saw recently with the building approval data, we're sort of going nowhere, in terms of improving that outlook. So we're going to look today at some details in terms of what building costs are doing for houses. Not just important if you're building a house, obviously, to know how much it's going to cost and whether it's rising or falling, but also for the inflation data, which we will discuss next week, Rachael. Very exciting inflation data next week, because it'll work its way into the Reserve Bank decision making on interest rates. And we know, as we've seen this year, how important interest rates are to the property market. As we've seen a very strong property market this year, almost across the board, because of cuts to interest rates. So shall we get started? I think I've spoken enough on the entree. And, what is it? The third week of spring? Isn't the year now? The second half of the year is just flying past.
Speeding by now.
Yeah, it's all gone. I hope you've done your Christmas shopping, Rachel. No, not yet. But you've still got, maybe some time to do that. But that's how scary it all is, because we're coming up to all the football finals are coming up in a fortnight. And then the next thing we'll be talking about will be, the Melbourne Cup and the spring racing season. So, everybody's focused on the property market at the moment because they want to get in before the Christmas break. So let's get going. My Housing Market is my brand. I operate as an independent commentator and data provider for the housing market. We bring the Wilson Weekly every week to the world in conjunction with the good folks at Infinity. And thank you to Infinity for providing the platform to be able to inform the wider world as to what's happening in the Australian housing market. So it is all about the current state and future prospects of housing markets, particularly the current state. So we bring a lot of data, don't we, Rachael, every week, all the relevant data, not just the prices and rents, etc., but also the background insights in terms of what's happening in the economy. And, we've already mentioned, how important interest rates are. And of course, that reflects the state of the Australian economy. So this week, we're going to start with, as I said, some interesting on-the-ground data for the week ending Wednesday, September the 17th. Oh, my God. Here we go, onwards and upwards. We're going to look at house building costs. And it's very interesting when we look at the medium-term history of house building costs, the escalation, just how it's skyrocketed since, over the last 4 years. And we'll also see what's happening currently with house building costs. As I said, important not only for that sort of supply line of housing that we so desperately need to inflate, but also it's an important factor in the inflation rate that the ABS measures every month. We're also going to, as a little bit of an interesting segue, we're going to look at the capital city house building block prices, Rachael, which again is very interesting. And there's some very interesting data in that too. And as usual, we'll look at the latest weekly auction results, well and truly into the spring selling season now. We're going to get a big weekend of auctions coming up, or big week of auctions coming up this week, because it's the week before the AFL and NRL grand finals. And agents and vendors always bring forward their activity, auction activity, so it doesn't clash with that big weekend of football finals. And of course, down in Melbourne, they have a public holiday on the Friday before the grand final, so they take it very seriously down there. And of course, that's just another reason to avoid having your auction on that particular weekend and through the week. So we'll get some big numbers coming up, so that'll test the market. But we'll certainly have a look at what's happened over the past week in terms of auction results, as we do, because it's such a great forward indicator as to what's happening generally in our housing markets, Rachael. So house building costs growth is steady, but the longer term view, not so good. So this is the My Housing Market House Building Cost Index. So this is derived from ABS building approval data. You can see there, Rachael, back in 2021, the previous government introduced a policy, the Home Builder Initiative, which was about elevating demand. We're in COVID, middle of COVID there, so the government was, as usual, turning to the housing market, to the building industry, home building industry, to stimulate demand, create jobs, and to keep our economy moving along. It it created too much demand at that stage. Lots of giveaways for eligible applicants in terms of getting into the property market by building a new home, particularly a new house. So that brought forward a lot of demand, or created a lot of demand. Unfortunately, Rachael, we didn't have the labour or materials to meet all that demand. So, hey, it was a good thing, a good policy, because, we didn't know what was happening through COVID. We needed economic stimulus. Australians traditionally use the housing market as an economic platform for increased activity. So yeah, that was great. Unfortunately, it released a lot of inflation, and was at a time when we were all also getting inflation from other COVID-related constraints. Price of oil, price of a lot of goods rose because of supply constraints and delivery constraints, etc. So it sort of added to all that, and we saw price of house building actually skyrocketing there through that period. We started to see an easing off about a year ago in that escalation of house building costs, Rachel, but it sort of didn't continue that downward trend, and it started to sort of move upwards. Recently, it's sort of flattened off. The building costs index is sort of flattened off, as you can see there on the chart, but it's quite high. But of course, the relevance isn't so much where it is now. It's about the growth over the past year, particularly in relation to the inflation measure. So this is where it starts looking a little ordinary. So when we look at the annual growth of house building costs from month to month, you can see it actually peaked in the middle of 2022 at an extraordinary 23.2% increase. So that was the peak of the impact of that home builder policy. Prices, house building costs up 23.2%. Now, since that peak, we've seen that reasonably predictable as demand eased, as the policy ended, that building costs started to move downwards, which is a good thing, and it's not just obviously a good thing because homes are less expensive, but it means that builders aren't worrying about a building approval actually having to go forward, or we can't go forward with our building approval because house building costs are too high. So it meant that was a constraint on, even if you got a building approval for a builder, it was like, oh gee, I'm not sure we can afford to build this thing, right? Because of how high house building costs are. So that was good. Building costs going downwards. It meant that builders could not take a chance in terms of profitability on their particular projects. But a year ago, we sort of got back down to around 3.5% annual increase. And even that was higher than the sort of longer term position, which is sort of 2 to 3% for house building cost escalation. But then we sort of started to see it pick up again, Rachel. And we've sort of seen that upward movement in the trend for annual house building costs ever since. And you can see that it's still tracking now. Even though it's steady, it's still at 6.7%. And that would be causing builders some nervousness, to be able to, because they've got to obviously cover that in terms of their profit model, that 6.7% increase. But it also means that, you're paying more for a new house, with that sort of increase. And it will also work its way back into the inflation rate, because it's a significant part of the inflation rate, house building costs. I just want to flip back to the previous slide just to give you an example of something, Rachael. And if we look at the previous slide, if we go back to where the inflation started with that policy, that home builder policy back in 2021, you can see there that house building costs over the past 4 years have actually increased 60%. 60%. Now that's 15% per year in a position where we've seen normally it's around 2 to 3%. So even though it's sort of like it's eased, yeah, hey, that's better. It hasn't gone backwards. You know what I mean? It's still 60% higher than where it was 4 years ago to build a house. So, and this is in an environment where we already had fewer homes than we need to satisfy demand, in migration returning, already under supply, and all the red tape and green tape that is a barrier to, to new development. So just to make a point there that, yeah, okay, it's eased. It's still too high historically at the moment. It's, nearly 7%, but overall 60% in 4 years. So it just shows you how valuable, housing is, and even sort of the new build, how valuable that is. And, in a way, Rachael, all that does is put upward pressure on established housing because, if new housing is so much more expensive than established housing, well, what choices do you have? And that's the point, that established housing has to rise as an offset, as a result of new house building costs. So if we look at the breakdown of the capital cities, this is over the month. So that's the quarter, July versus the quarter, the previous quarter to June. And we see Brisbane, the big move, and every data set we seem to produce recently, Rachael, has Brisbane front and centre in terms of top performance. And it's been the top performer in terms of house building costs, up by 4.3%. And if you remember last week, Rachael, we spoke about building approvals, and we saw that Brisbane building approvals have fallen this year so far compared to the same period last year. Now that's building approvals for houses. So we're seeing building approvals for houses falling in Brisbane. We're seeing prices for houses going through the roof, established houses in Brisbane going through the roof. And now we're seeing house building costs on the increase faster than any other state over the past month. So, gee whiz, that's, that Brisbane market is really looking like a challenge for home buyers in a sense, with more expensive house building costs. And as we've seen, fewer homes actually being approved for building, or houses being approved for building in Brisbane. And when we look over the last year, we can see Brisbane again is up at the top in terms of the increase in house building costs over the past year, up by 9.6%, just a little below Adelaide, 10%. But, those growth markets of Brisbane, Adelaide and Perth are certainly leading the charge in terms of house building costs. And as we've seen, as we mentioned last week, we're seeing overall the number of houses approved for building has started to go backwards. It's really unit approvals that are taking the market forward, new build market forward. But house building approvals have actually continued to decline, and yet the price of building a house, the cost of building a house, is on the increase. So no surprise when we compare the house building costs between capital cities. So we use Sydney as an index here at 100. You can see Sydney is clearly the most expensive place to build a house there. It's 17% more expensive than Melbourne, 23% more expensive than Brisbane, and 30%, nearly 40% more expensive than Adelaide and Perth. So the most expensive place to buy a house, Sydney, and the most expensive place to build a house is Sydney. So I guess that's the only good news there for the other capitals, but we're seeing them, I guess, catching up with the rate of increase of house building costs recently.
Yeah, well, we're still seeing Sydney topping the charts there with build prices, as you said, no shocker there. But Brisbane and Adelaide are still sneaking up fast there. Yes. Is this catch-up growth or a real shift in where building activity and really cost pressures are heading now?
Well, that's the demand, is being created. As I've said, we every week the data set from Brisbane seems to lead the capital city pack, and it's not just unit prices or in terms of growth or house prices, but now we're seeing the real supply side situation in terms of building costs for houses also on the increase. But the converse to that is we're seeing the actual approvals for new houses in Brisbane falling. So that can only create more upward energy. And as I said, what this means is that people will be sort of saying, well, I just can't afford to build a new house. There's less demand. That puts pressure on prices going, upwards. And as we'll look at next, land is going to be the cherry on top of the sundae when we're talking about the Brisbane market, But it's catch up. And we know that Brisbane house prices, on some measures now are higher than Melbourne house prices, and continuing to rise at a very strong rate, and that again just reflects the fact that how much more expensive it is to purchase a property in Brisbane now, and that eventually, I'm not going to catch up with Sydney, but it's certainly on the rise now. And you would have thought that, in a sense, that Brisbane's still got some potential to the north and to the west for development, but even with that, sort of broad acre capacity, it's not creating, the supply line for houses that you thought it would. And we've got the first home buyer scheme coming up, which is going to create a lot of demand from first home buyers with that government scheme. Where are they going to buy in Brisbane? It's and that'll only put more pressure on prices. And dare we say, let's not talk about the elephant in the room, which of course is the Olympic Games in 6 years' time. So it's all sort of superheated in terms of the housing market environment, particularly in Brisbane. But no good news there for the supply of new houses, with prices continuing to rise. Again, that will work its way into the inflation rate going forward, which has a implication for interest rates. So that's all about house building costs. Let's have a look at land prices. So forget about building the house. You've got to buy the land, right? That's where it all starts. So how do we go with land prices? So this is a slide we show to our in-house audience, Rachael, but we'll bring it out to the wider view here, which is very interesting. So these are house building blocks. So these are this is measuring land that is advertised for use as a house building block. So it's not for development sites or apartments. These are specifically for house building purposes in the capital cities. And you can see there, with the exception of Perth, all the capital cities have recorded strong growth over the year to August in terms of the price of house building blocks. But Rachael, once again, look at Brisbane. Brisbane house building, the average or the median price for a house building block in Brisbane is now $530,000. It's now higher than Melbourne, right? And that's up by 19.1%. And look at the number, just 37 sales for the August measure of house building blocks. And this is in a boom market, just 37 sales. Look at the number compared to Melbourne and Sydney, 114 and 167. But a 19% increase in the price of a block of land in Brisbane. But Melbourne up 13.9%, Adelaide also up 13.9%. Sydney not quite as strong, but look at Sydney's median price for a block of land, $720,000. That's what you got to pay for your block of land in Sydney, is $720,000. And look at you get an average size of 324 square meters. That's not a lot of land. I mean, there wasn't a time too long ago where we were talking about the quarter acre block as the average block of land for a house. This is way, way, way short of a quarter of an acre, let me tell you. 324 square meters. Brisbane a little bit bigger, which is what you sort of would expect with Brisbane, 512. But again, square meters. But again, that's not a large block of land. And this is what we're seeing because of the premium that land is. People are sort of not regarding the need for a larger block of land, a backyard, as primary. It's about, let's get the house up, right? The square meter, the dollar per square meter in Sydney is now well over $2,000. So you're paying over $2,000 for every square meter for your block of land in Sydney to build your new house on. So, as I said, we're not surprised Sydney being the high price there. Again, it reflects the high price of established properties in Sydney. Median price in Sydney for a house is $1.6 million. Of course, Brisbane is just around $1 million at the moment. So that's that difference playing out. At least I guess at Brisbane can point towards a better position in terms of the dollar per square meter. But at the end of the day, if you're looking to build a new house in Brisbane, you're going to have to pay over $500,000 on average for that. And there's not a lot to choose from, Rachael. So that can only really mean, higher prices going forward. And as I said, that puts even more pressure on established houses because people don't have the choice going forward. Because, if the new home is more expensive than the established home, well, what do you go? You go to where do you go? You go to the established house.
Yeah. I mean, land prices are still climbing, even in those markets where the sales volume's a little bit patchy. Is this scarcity talking, or are the developers paying more for dirt because demand's that strong?
Well, of course, this is the problem. you would have thought that, markets that have a capacity for broadacre development, such as Melbourne, it has a lot of flat land on its perimeter. And that's been typically a destination for first home buyers to start out in the suburbs, out on the fringe, and sort of work your way back or stay out there, whatever. But there's still a lot of green and red tape constraining development in all those capital city markets. So despite perhaps the capacity for broadacre development, it's still not occurring for some of the same reasons that's constrained for some time. And that is, the green tape and red tape from, government policies. And, Sydney's sort of got a bit of an excuse because it's really built out Sydney to a large degree. It's geographically constrained. It's got the Pacific Ocean on one side. It's got the National Park down to the south. Then it's got the Blue Mountains. And so basically all you can go is out to the southwest. And yet they're already heading towards Goulburn down that way anyway. And Sydney siders are quite happy to sort of keep moving down to the southwest for their new home development. So there's some excuses in Sydney because of those geographical constraints. But, and Sydney's created Parramatta as a new sort of mini capital city hub. So it can continue to move to the southwest and still have a connection to a significant infrastructure centre such as Parramatta. But, the others, it's just still the same issues in terms of red tape and green tape that are holding back some of that broadacre development. And as I said, we're starting to see a decline in the number of houses approved for building, Rachael. So after a bit of a surge a year ago, that's starting to move backwards. It's offset by a surge in development for apartments, but that's going to take 3 or 4 years for those apartments to actually be able to live in them. Given all the at least 3 years, given all the issues to do with the proactive engagement of governments now with higher density development, as we already discussed, is what's happening in California at the moment. Similar things happening now. So, no good news on the supply line there, Rachael. We need more land. People will go. They will come. If you get the land, they will build. And even though people are quite happy to have a smaller block of land now to start their journey or whatever, we still can't find enough to satisfy demand, and prices are still rising, and the numbers that are coming through are just not enough to satisfy demand. So, shall we look at the latest auction results, Rachael, for the last week? We are in the spring selling season, as I've said. We always expect more activity. Last week, no surprise, big numbers of auctions coming into the market. We will expect that again, as I mentioned, this week, because it is the first Spring Super Saturday of the year, where we get the front-end loading of auction numbers because of agents and vendors wanting to avoid the grand finals in the following week for their initiatives. But we still had our strong clearance rates being maintained, despite a big surge in the number of auctions coming in, which provides buyers with more choices, and it provides sellers with more competition. Therefore, that theoretically puts downward pressure on clearance rates. But if the market's strong, as it has been consistently for the past few months, then the more the merrier from a buyer's point of view. They get more choices, and that just suits them fine. As I said, we're going to see more auctions coming through as we do in spring. We get a big rise this week, then a lull for the grand finals, and then we start to pick up again before our next Super Saturday of the year, which is the Saturday before the Melbourne Cup long weekend holiday, which typically is a big weekend of auctions, similar to what we're going to see this week. So last week, Sydney had 989 auctions. So another good clearance rate in Sydney there, 77.1%. These are very good numbers for sellers. That shows that nearly 8 out of 10 properties are selling under the hammer every week, and that consistency has been profound over the last 2 months. A little bit more, a few more auctions compared to the previous week. We'll get a big rise this week, typically, but we're tracking consistently around 10% higher in the Sydney market than we were a year ago. Melbourne, big rise in auction numbers. Melbourne, nearly 1,200 auctions in Melbourne. Another mid-70s clearance rate in Melbourne, 73.4%. again 10% higher than where it was a year ago. The Brisbane market has picked up with some very positive results there for Brisbane. Again, we're talking about that Brisbane market, Rachel. Typically, Brisbane is a 40 to 50% auction market in terms of clearance rates. It has a different auction culture compared to the other capitals, but it's been tracking a lot higher over recent weeks, Rachel, as you know. And another very good result there, 55.8%. And that just validates just how strong prices growth, how strong demand is in the Brisbane market at the moment when it's producing these types of, for it, very, very strong clearance rates. Again, well ahead of where it was last year at the same time. Adelaide, back in town, Adelaide, near 80% clearance rate. Again in Adelaide, higher than where it was a year ago. And Canberra's been the real turn market over the past month or two. We know Melbourne's revived clearly over the past 3 or 4 months, but that Canberra market has really picked up over the past month or two. Is now producing consistent 70% clearance rates, and it's come from a period of very subdued auction activity. You can see a year ago there, 56%. So it's getting up towards 15% higher now clearance rates compared to a year ago. So pretty good news there for that Canberra market and for all our markets. So despite increased listings, Rachel, we're still getting strong clearance rates. And I would expect that to occur this weekend, despite a large number of auctions coming into the marketplace, particularly on Saturday. So there's our trends. Same, every chart's the same for all the capitals. A big rise since the interest rate cuts in February for Sydney. And higher than where they were a year ago. Melbourne, same old story. Rises in clearance rates since February, well ahead of where they were a year ago and the end of last year. Brisbane market, same story. Look at that rise. That trend is just consistent from capital city to capital city, and that just does reflect the impact of lower interest rates on our housing markets. And there we are. Adelaide, like I said, these trends are all the same. A big lift from a year ago. Well, not so much for Adelaide, but certainly since the beginning of the year, a good lift for Adelaide. And Canberra's the strongest upward trend there, very consistent upward trend over the past 12 months. So coming out of a really subdued period of activity, Canberra, where it was around the 50% mark, and now back up with the other mainstream capital city auction markets with the 70% plus clearance rates. If you want the latest auction clearance rate, get onto my LinkedIn site, which is Doc Andrew Wilson at LinkedIn. Every Saturday night, 6 o'clock, you'll get the snapshots. So it tells you right there, latest results, hot off the press as to what's happening in the auction markets. And on Sundays, around about 9 o'clock, we release the full national report, which gives you the regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer. If you want to do some tire kicking and see what all those glorious high-priced properties are, where they are, they're all there on the national report released on Sundays at 9 o'clock. So get onto my LinkedIn channel if you want to get a hold of that. If you've missed last week's, there is a QR code. You can scan that code. It will give you the latest national auction report. So we're going to sign off quickly now, Rachel, with, as usual, the biggest giveaway in property, and that is the My Housing Market Infinity Suburb Data app. This is where you can look at every suburb in Australia. Yes, every single one. Well, every single one that has data. So we don't obviously worry about those that don't have any data. And that will give you all the asking prices and asking rents. So you can delve into what's happening at the local level, Rachel, for your particular suburb or a suburb you're interested in or whatever, But it's a great thing to put on your phone or on your desktop. And it's updated with the latest asking prices and asking rent. So these are what the agents are asking, what they're pitching in the market, and what vendors are pitching in the market. So lots of observations there, typically. And as I said, it gives you a great insight into what's happening in real time in the housing market. So you get hold of the app by clicking the link there or scanning that QR code. You have to have a password, though.
Correct.
Okay, but the good folks at Infinity, Rachael in particular, will help you with that password. So get a hold of that one. But it is a great little opportunity to do your own research on the housing market and in real time. So you're not looking back to something that's happened 6 months ago. Now, that's a screenshot. You can filter it for price or rent. You can filter it for the capital city region or the outside capital city region. We're looking here at Blacktown, big suburb of Sydney. You can filter for house unit or townhouse. We're looking at houses. You can also filter for the number of bedrooms. How good is that? This is tremendous. And the result there, these are the asking prices for a 4-bedroom house in Blacktown. Median price. So it's not just the median asking price. You also get the high and the low. So the extremes that the market's asking at the moment for a high and low for a 4-bedroom house in Blacktown, and the number that are for sale currently, 32 in Blacktown. Exactly the same data for the rental market. So it's great stuff. Particularly if you're a landlord, want to know what the market's offering at the moment for rent, and also if you're a potential tenant, if you want to know what you've got to pay for rent in these suburbs. So also, if you're looking at return on investment as an investor, we also give a little bit of an extra one here, which is the top 10 yields for each of the regions, capital city or non-capital city region. So that's the yield, which of course is the return of the annualized rent, asking rent currently, against the current asking price. So that gives you the return on investment, the yield. That's a gross yield, of course, because it doesn't count for the costs that you have to cover for your rental property, but it's a good indicator there. So you've got the top 10 yields, also provides the vacancy rate, the current number of properties for rent, the current number of properties for sale. And if you click on the hot links, it'll take you to a map of the suburb. So if you want to know where Zetland is, or where Rosebery is, or where Ryde is, just click the link and it'll show you exactly where these places are. Isn't that fabulous, Rachel? So next week, very important data next week. We've got the labour market data. The Reserve Bank will be looking particularly hard at this. We've had a very consistent period of strong activity in our labour market. Interesting, the US has actually gone a little sideways with its labour market activity, not creating as many jobs, and its unemployment rate just rising. And that may mean an interest rate cut in the US today, perhaps, but they haven't cut rates for a year. So we've been a lot more active. So it's not really relevant to us in that sense by comparing their rate cut to ours. But certainly the Reserve Bank will be looking closely at that labour market data, which we will discuss in depth, and most importantly, the inflation rate data for August. So that'll be the last monthly inflation rate data that we can use as a guide before the big meeting from the we'll get a good feel of what's happening with inflation. If you remember last month's inflation data, Rachel, had a real shock to it because we had a big spike in electricity prices. Will that occur again? If it does, it puts into question an interest rate cut on the Melbourne Cup Day meeting from the RBA. Not necessarily won't occur, but it certainly puts it into question. So some big data to discuss next week. Rachel, I can see you can hardly wait for that data to come through. So, but you'll have to wait. So just count those 6 sleeps and you'll be there. All right. So latest auction weekly auction results as well. So everybody have a good week and enjoy the warmer weather. It's great. Where I am at the moment, it's 26 degrees. So I'm enjoying that marvelously. And we're all down to the Gold Coast again this week for the Infinity Real Estate Mastery courses, which are bigger than Texas, as we know. So we're all looking forward to that one again, with some more insights from Rachael and myself on the property market. So if you missed this week's report, there it is there, QR code. You can download that. So I will now bid everybody adieu, which means goodbye.
Awesome. No, you're right, Doc. We will be on stage together this weekend at the Real Estate Mastery. Yeah. We are on stage early on a Saturday. I might have some breakfast champagne with you.
No, I can't. It'll ruin the day. Anyway,
well, that's all for this week's Wilson Weekly. We've covered everything from building costs that are behaving slightly to land costs and options that refuse to slow down. Yeah, not so much. Big thanks to Doc for the intel and to you for tuning in. I'm Rachael Howlett, reminding you in this market, it's all about information, interpretation, and maybe a little bit of Wilson Weekly inspiration.
Thank you very much.
You're fucking gone. See ya.